Chair recognizes the gentleman from California.
Thank you, Mr. Speaker. I rise in support of FHA Multifamily Loan Limit Adjustment. I see that Mr. Wiener's just walking in the door right now, so we're going to be able to have a very nice conversation. Welcome, Mr. Wiener. It's very glad to have you. I'm honored to support your bill. This addresses the need for new construction or substantial rehabilitation to multifamily units in extremely high-cost areas of the country. The FHA Multifamily Mortgage Insurance Program works with private sector partners to expand the supply of rental housing. FHA's Multifamily Mortgage Insurance Program enables qualified buyers to obtain long-term, fixed-rate, non-recourse financing for a variety of multifamily properties that are affordable to low and moderate-income families. These families include police, firefighters, teachers, entry and mid-level service workers, and among others. In our most expensive cities, it is very difficult for these workers, particularly those starting out in the workforce, to find affordable rental housing where they work. While the FHA Multifamily Mortgage Insurance Program could help, because of its loan limits, there is only 3 FHA-insured multifamily loans for high-rise construction or rehabilitation approvals in the nation in fiscal year 2007 and 2008. According to the Mortgage Bankers Association, MBA, while the base loan limit and high cost factors have been raised over the past 8 years to address issues in most parts of the country, there are still problems concentrated in major cities where high-rise construction is involved. In fact, the data shows that while elevator buildings cost 45% more than non-elevator structures, the current loan limits for these structures are less than 10% higher than non-elevator structures. Developers are simply unable to provide affordable housing units in high-cost areas because the current statutory limits for FHA mortgage insurance are too low for these types of structures. The slowdown in affordable rental housing production, that is, being enhanced by the credit crisis, has resulted in a significant gap between the demand for the supply of affordable rental housing. There is no private sector alternative to this program. The market served by FHA multifamily insurance does not overlap with competing private sector's insurances. This bill would increase the multifamily loan limit for elevator buildings by up to 50% and give the Secretary of HUD the authority to increase the limit in extremely high-cost areas to 305% of the base rate. Similar to insurance, the mortgage is provided in states like Alaska, Guam, Hawaii, and Virgin Islands. And I think Mr. Wiener and I agree if it's good enough for Alaska, Guam, and Hawaii, and the Virgin Islands, it's good for the rest of the United States. This program has a positive budget impact. Now, this does not cost the federal government any money. Making money for the taxpayers is what we're looking at. Looking at the President's fiscal year 2010 budget, the multifamily insurance program that relates to these loans limits is projected to make a profit, I repeat, a profit, on new loans insured by the fiscal year budget of $93 million. In fact, over the years, FHA multifamily loans have consistently made a profit for the taxpayers. Under the bill, 52 projects with over 11,000 units valued at $3 billion that are on hold would be able to move forward by using the FHA program. In Los Angeles alone, 5 multifamily projects for a total of 1,700 units that are stalled due to the loan limits would be able to move forward. The National Home Builders Association has predicted that with the passages of this bill, 12,000 new construction jobs will be created. Over the past 74 years, the FHA Multifamily Mortgage Insurance Program has operated successfully, working with private sector partners to expand the supply of rental housing. This public-private partnership has leveraged billions of dollars in private sector investments to provide rental housing for millions of families and the elderly throughout the country. The bill is endorsed by the Mortgage Bankers Association, the National Association of Home Builders, the National Association of Realtors, the Institute of Real Estate Management, and tens of others. I want to commend Chairman Frank and Ranking Member Bacchus for sending this bill to the floor, and I reserve the balance of my time.
Chair recognizes the gentleman from New Jersey.
Mr. Speaker, I